Welcome to today's market report. European stock markets edged higher on Friday, helped by further evidence that the region is recovering from the pandemic-influenced slump, while the first quarter earnings season also continues. DAX in Germany traded 0.6% higher, CAC 40 rose 0.2%, FTSE 100 climbed 0.3%. Global stock markets have been pushed to record levels of late by signs of a broad economic recovery, helped by vast amounts of fiscal stimulus and ultra-easy monetary policy. France's economy, the Eurozone's second biggest, grew 0.4% in the first 3 months of the year from the fourth quarter, when it had shrank 1.4%. The news was less impressive in Spain, as its economy contracted 0.5% in the first quarter, down 4.3% on the year, but is still represented an improvement on the 8.9% annual drop the previous quarter. Germany's GDP fell even more sharply by 1.7% rather than the 1.5% expected. Eurozone's GDP is forecast to have shrunk 2% in the first quarter versus a 4.9% fall in the final quarter of last year. The earnings season continues, with AstraZeneca stock up 2.5% after the much-maligned drugmaker said it expected higher sales in the second half of the year. It reported first quarter profit and sales ahead of analysts' average expectations, including $275 million in COVID-19 vaccine sales. The banking sector remained in focus on Friday, with Barclays stock down almost 6% after the UK bank reported first quarter net profit of £1.7 billion, but declined to release cash set aside to cover bad loans as its peers had done, suggesting caution going forward. BNP Paribas stock also fell 1.3% after its better-than-expected first quarter profit was helped by lower provisions for pandemic-related bad loans. Banco de Sabadell stock climbed 4% after its British unit TSB swung back to a profit in the first quarter after speeding up a cost-cutting plan and seeing a rebound in its equity trading business. Nestlé stock rose 0.6% after the world's largest food packaging company said it has bought vitamin and supplements maker The Bountiful Company for $5.75 billion. Oil prices edged lower on profit-taking on Friday, but are still set to end the week with hefty gains as signs of economic recovery stoked optimism of a strong rebound in global demand this year. US crude futures traded 0.7% lower at $64.53 per barrel. Brent contract fell 0.5% to $67.68 per barrel. Both contracts are up around 4% this week, climbing to its highest levels in 6 weeks. Gold futures traded flat at $1,768.55 per ounce. On the FX front, the GBP/USD pair refreshed daily lows during the early European session, with bears now awaiting a sustained break below the 139 round figure mark. The pair extended the previous day's retracement slide from over 1 week tops around 139.75 region and witnessed some selling on the last trading day of the week. This marked the first day of a negative move in the previous 6 trading sessions and was sponsored by a modest US dollar strength. As investors looked past the Fed's dovish message, the overnight strong pickup in the US Treasury bond yields assisted the US dollar to rebound from the lowest level since February 26. Apart from this, a generally softer tone around equity markets provided an additional lift to the safe haven dollar. The British pound was further undermined by the risk posed by the Scottish elections next week. Polls are pointing to the supermajority for pro-independence parties in Scotland's parliament, which might intensify pressure for a referendum on independence and act as a headwind for the sterling. This comes on the back of controversy over funding arrangement for the UK Prime Minister Boris Johnson's official apartment. This in turn largely offset the optimism over a strong recovery in the UK, bolstered by the easing of COVID-19 restriction and kept the GBP bulls on the defensive. The upside for the US dollar is likely to remain lifted amid firm expectations that the Fed will keep interest rates near zero levels for a longer period. This in turn makes it prudent to wait for some follow-through selling before positioning for further meaningful downside for the cable pair. Eurodollar's upside momentum reached the 121.50 level before losing some vigor on Thursday, always against the broader backdrop of the persevering selling bias surrounding the greenback, which gained extra pace following the dovish tone from the FOMC event. The dollar index was trading at 90.648, around a 2-month low. This is today's market news. Thanks for listening. We'll see you next time.